Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, Head of Investment Strategy. With an objective to empower you with investment insights, on this program we discuss various perspectives that are shaping the global investment landscape. In this edition of the podcast, we review the investment case for Indian equities and highlight why we remain positive about the outlook for large caps while we are turning cautious on the mid and small cap space. From a macroeconomic viewpoint, India remains a compelling long-term growth story for the remainder of this decade. Even for this cycle, which could last for another year or two, India fares well on our growth inflation framework and is likely to be the outperformer within the G20 space. Thinking about the growth in the near term, we see consumption-related trends moderating in the months ahead, while the industry sector is likely to be strong. Deficient monsoon and falling domestic air passenger traffic are indicative of weaker consumption in rural and urban areas respectively. However, on the industry side, purchasing managers' indices remain strong, auto production and electricity demand continue to rise, and industrial production growth remains sturdy too. Given that moderation in consumption-related trends, we expect broader economic growth to moderate over the coming quarters. Yet, one needs to keep in mind that India remains a global bright spot in terms of growth even in the next couple of quarters. Now, looking at equities, India remains a strong structural growth story not just for economic growth but also for equity investments. Indian equities delivered significant outperformance in US dollar terms in relation to MSCI All Country World Index over the last 20 years. Looking at the last 12 months, Indian equities have not participated in the equity market rally between October 2022 and March 2023. This is the point we had highlighted 4 months ago in our podcast titled Indian Equities, the Tiger That Did Not Roar. We then argued that India is likely to outperform in the subsequent months. Looking at the last 6-month performances, India indeed outperformed the global benchmark by circa 10 percentage points. Increased foreign institutional investor flows, improved earnings outlook, and a robust macro environment have all helped in the outperformance of Indian equities. While we retain our constructive outlook on broader Indian equities, we now turn cautious on the mid and small cap space. Indian mid and small caps have outperformed the large cap space by 11% and 16% respectively over the last 6 months. Following that sizable outperformance, valuation gap between mid and small cap space and the large cap space is currently positive 36%, which is the highest premium for any given cycle. Also, given the significant breadth of outperformance from small and mid cap companies, we think some caution is warranted looking ahead. Risks to the outperformance of small and mid caps come from higher oil and food prices, which could impact the domestic demand through lower disposable incomes and potentially higher interest rate expectations. Also, the potential slowdown in the domestic economy discussed earlier is a risk too. In addition, assembly elections in 5 different Indian states through the remainder of this year could act as key risk events. Therefore, after a significant move higher in the indices, we think it is prudent to turn cautious on India's mid and small cap equities on a tactical basis. However, we maintain a constructive view on Indian large cap equities with preference for financials and information technology sectors. Within the financial space, we think the bank sector is likely to benefit from margin recovery due to peak deposit rates, pickup in credit growth, and improved operating leverage at some large banks. In the information technology sector, the market seems to have mispriced the demand environment, which continues to remain relatively strong. Stable to weaker Indian rupee is likely to provide tailwind for IT exporters, and implementation of generative artificial intelligence is likely to drive productivity gains within the information technology sector. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information, please reach out to your contact at ADCB. You can also log on to our website at www.adcbam.com. My name is Kishore Muktinutalapati, and I'll be back next week with another episode of Global Investment Insights.